A flat performance that has actually come through, but we've seen quite a bit of numbers coming through from the corporate side of things. Let's touch on British American Tobacco. Revenue growth of 6.6 billion shillings, operating profit looking far stronger, and then also the shilling working in their favour.
Yeah, obviously British American Tobacco has gained from a weak shilling that prevailed through last year, and last year we saw a full year of the semi-processed tobacco exports come through, and obviously then the weak shilling positively impacted the share.
Dividends are also up quite strongly as well. Given the fact that we're seeing a much stronger shilling, of course we know the shilling actually weakened to above 100 to the US dollar. We're looking at a very different picture right now. What kind of assumptions can we take forward given the fact that we're starting to see a very different currency environment?
Obviously, then this year is not going to be as impressive as it was for last year for British American Tobacco, because we largely expect the shilling to remain strong and stable through this year, but we expect good performance from British American Tobacco.
Would you say, I mean, we know that this factory is very important from a regional perspective, the one that is in Nairobi. Given the fact that it does have quite a large footprint regionally, is this a buy for you?
Pardon, please repeat your question.
Would you buy this stock? Is this a buy stock for you? Do you find the stock attractive?
Yeah, I find the stock attractive. Giving out a dividend of 30.50 compared to an EPS of 30.85, that's very attractive in terms of dividend yield. It's definitely a good stock, and it's a stable stock that doesn't experience much movement in price.
Again, it seems that the stocks and the companies that actually are not operating only in Kenya but regionally are the ones that are doing quite well. Bamburi Cement being one of them. We saw turnover increasing by around 28%. What is your view with regards to the actual economic situation in Kenya, and how much revenue can actually be derived from the local market as opposed to just looking at the overall East African region?
Local market last year saw a high interest rate environment, which would have generally affected the real estate sector, with people taking up less loans for mortgages. But I mean, on the other side, we saw Bamburi Cement record very impressive earnings, not only because of their domestic consumption, but also because of exports. And the weak shilling also helped them. Coming through into this year, though, we expect interest rates to fall during the second half of the year, which will obviously help a better uptake in mortgage loans, and therefore more construction, and help Bamburi even increase their earnings further.
What is quite concerning here is the cost environment for Bamburi Cement. We only saw operating profit increasing by around 9% to 7.9 billion shillings. Is this a concern for you? Would you like to see the company contain those costs better?
I think last year what largely affected Bamburi's cost was because of the weak shilling and the high fuel cost, and they import a lot of this. So I think this year we're not gonna see a big rise in operating costs like we saw last year. It's mainly gonna remain stable just due to a stronger shilling. Yeah, so it's obviously a concern, but we obviously would hope that they would contain their costs.
Okay, well,
better.
Given the fact that there's also a lot of cautiousness when it comes to the global macroeconomic environment, which could actually impact a lot of African economies, not only the East African region, but across the board, would you say that this stock right now is looking attractive, or would you exercise caution when looking at Bamburi?
I think Bamburi is looking attractive right now. Most of the governments regionally are very big in infrastructure development, and Bamburi producing the cement, they have a steady domestic market and a local market. In my opinion, it's an attractive stock, and with interest rates bound to fall this year, then we'll definitely see the real estate become more attractive this year.
Let's touch on housing finance as well, Brenda. That company out with a 74% jump in 2011 profit. The loan book also growing. This is despite the high interest rates environment. This is a large jump in that profit number.
Yeah, this was very impressive for housing finance. Seeing the loan book grow faster than their deposit book was very interesting. and despite a high interest rate environment in mortgages. So this was obviously due to a better marketing of their products and of their deposit and their loan products.
Brenda, also looking at the overall market scenario, we're seeing earnings coming through, and so far we haven't really been disappointed. It seems that things are looking quite strong, but from a banking perspective, it has been said that the banks are going to remain depressed for the next 3 quarters. Is this your view as well? And could this actually have a negative impact on the overall sentiment towards the market?
We largely expect a flat performance in banking stocks this year, mainly due to high interest rates, which is going to give them a squeeze in their net interest margins. But I mean, during this period, we expect to see excitement as they release better than expected results. But towards the second half of the year, then we expect things to remain flat.